Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. The Fed just cut rates by 25 basis points. It comes one day after the U.S. elections saw President Trump and the GOP run the table as far as the Senate and likely the House and the presidency. One of them, the election was very consequential. Uncertainty prevailed. This one, certainty prevailed, so it was inconsequential, and that seems to be the reaction in the major currency pairs. Nevertheless, there is a little bit of a dollar buying twist here so far. So let's go through some of the major currency pairs, take a look where we're at as we head into Fed Chair Powell's statement. So let's get started. All right, looking at the euro versus US dollar, this area right through here was had marked as a support level. After the break above that level earlier today, the price moved up toward the 100 and 200 hour moving averages and then rotated back down toward that level. And we tested the high of this swing area between 1.07609 and 1.0776. It's going to take a move below that level to increase the bearish bias. Have traders looking in this direction. Alternatively, if we do find support buyers against this area, we'll look toward the 108.10 level and then look back toward the 100 and 200 hour moving averages, which are near converged. It would ultimately need a break above those two moving averages and then the 200-day moving average up here to increase the bullish bias once again for the euro versus US dollar. Absent that, the sellers are probably still more in control. Let's take a look at the dollar versus yen next. And if we look at this chart, the 100 and 200 hour moving averages did a pretty decent job of holding support. They're converged at the 152.92 level. And you can see the number of different hourly bars that came down toward that, give or take a pip or two or three or four, and found support buyers near that level. We're currently trading at 153.14.7, so we're about 8 plus 14 at 22 pips above that level. The 61.8% retracement at 153.39 would be the level that we need to get to and through to increase bullish bias, and then look to get above these high levels that formed this ceiling in trading last week. Those levels come between 153.59 and 153.88. Let's take a look at the sterling versus US dollar from an hourly perspective. And we moved above this cluster of moving averages, which I had earmarked at the start of the day that we needed to get to and through. That includes the 100-day moving average at 1.2988 and the 100-hour moving average at 1.2947. The high price came up and moved above the 130 level, as you can see right here, but then it rotated back down. We're back in between the high and the low of these moving averages. We'll be looking for either a break up below the lower 100-hour moving average or a break above the higher 100-day moving average to give the buyers or sellers the advantage from here. But right now we're more neutral in the sterling versus US dollar. Next, let's take a look at the dollar versus Swiss franc. And this currency pair came down to the high price right here at the 0.87102. The low price just moved to just below that level, but it has since bounced back. We bounced back up to the 0.8748 level. I'm going to need to go to the 4-hour chart to show you the significance of that. And that if you go back to this high right here, that's where that level came in. So we found resistance sellers near that level, and that level remains a key target on the top side to get to and through once again. If we can get above that level, that would increase the bullish bias. If we stay below that level, then the buyers and sellers are still battling it out with support down here at the 0.8710 level and resistance up at the 0.8748 level. Next, let's take a look at the dollar versus Canada. Again, we'll focus on the hourly chart. And what we saw in trading here today was a break below the 100 and 200 hour moving averages. That's these converged moving averages right here. We saw increased momentum to the downside and ultimately did move below the 100 bar moving average on the 4-hour chart. But as you can see, over the last 5 or so hours, the price is moving above and below that level. We did hold support down here against the high of this swing area, where we had a number of different swing lows and swing highs going back in time. Before it started to hold support and then moved higher through here. We came down to and through that area in trading last, 2 days ago, I should say. But we fell short of this target down here near the 138.13 level. This level right here between 138.33 and 47 remain a level to get to and through on the downside. The 100 bar moving average on the top side needs to be broken and stay broken to increase the bullish bias going forward in the dollar versus Canada. Finally, let's take a look at the Aussie versus US dollar. This is on the hourly chart. We moved sharp. We've had a sharp move to the upside, actually, for this currency pair and trading here today. That move to the upside initially moved above the 100 bar moving average on the 4-hour chart. Note that yesterday and the day before we traded a little bit above and below that level, but could not sustain momentum above the level. In fact, finding willing sellers against a 50% retracement in trading yesterday before moving all the way down, rebounding into the close today. We moved above the 200-hour moving average, then moved above the 100-bar moving average, and ultimately the 50% retracement level. That sent the price up to the next target area up here, where we had a number of different swing lows and swing highs going back in time and back further as well. But these are some of those levels through here before moving down. So we return back to that level also near the 100-day moving average. That level comes in at 0.66909. We have since retraced back down toward this somewhat support level near the 0.6657 level. Better support's probably at the 50% retracement, but we're currently trading at 66666, the devil's number, or close to it, and deciding whether we want to get above the 100-day moving average, in which case that would open the door for further upside, or move below the 50% retracement, move back down toward our 200-day moving average, which is this green line. That was a key break in trading here today. So there you have it. Run through some of the major currency pairs as Fed Chair Powell's press conference begins. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.